Alrighty then. Hey, this is Kenn Renner, real estate broker here in Austin, Texas. Thanks you guys for joining me. Really appreciate your persistence, be able to get on this call. I know everybody's really, really busy. And so let me go ahead and stop sharing my screen so I can say hello to everybody. Hi, how's it going? This is Kenn Renner, real estate broker here in Austin, Texas. Just appreciate all the assistance here in trying to get this webinar up and running. I've had some technical challenges, including my Zoom won't work on as of an update, I think, on my regular desktop. So now I'm doing it with my laptop. So, anyways, once again, I really appreciate you coming and joining this continuing education class. This is a beta class. What I mean, by that is that. We are, I'm starting a series for a continuing education for several different states. It'd be Texas, Utah, Nevada, and California. And so I'm meeting actually with the broker that's going to help me they have a continuing education platform. So that's kind of what I'm doing is put together a 4-hour series so people will be able to have some education about what I do and how I help other clients do this and how you can do the real estate investing side of the business. So you could, if you'd like to, you can put some questions in the chat box and we'll answer all those at the end. I've got a lot of slides to cover. If you've been on some of the webinars recently from Tom Ferry, you'll see some stuff that's going to be familiar with, that you've been familiar with, but then there's going to be definitely some new stuff because I just created it in the last couple of days. So once again, appreciate everybody for participating, and I look forward to connecting with you on a more, a more one-on-one basis. I will be continuing to add value through webinars and presentations and podcasts, and it's pretty much what I do. And this has put me on the map. Is I do what's called edu marketing. I came up with that term. It's education, but it's marketing at the same time. And you'll notice that even through all this whole presentation, it's an education, inspiring, motivating, challenging, but there's always a twist of marketing in there because that's the angle. We're here to help people be influences in people's lives, to become the knowledge brokers and help them get from point A to point B. Sometimes they don't even know where point A or point B is, so we want to help them, guide them into this. So let me go ahead and share my screen. We'll get right into it. So just let you know, this will last almost an hour. I'll have enough time to do some Q&A at the end of it. And so, so if you really want to connect, you want to get more on one, have some questions, my phone number will be at the end. Also, I have a website that you can connect through, which is down there as theinvestorsavvyagent.com. And so now let's go ahead and dive into it. Just a quick bio for me. I've been 40 years in the real estate and investing realm. Got my first license in 1983 in Anchorage, Alaska. Bought my first single family home in Anchorage, Alaska when I was 19 years old. Wished I'd still had that house today, but bottom line is that's how I got my start. And ever since then, I've been involved in real estate and investing and closed over $500 million in sales. And 125 million of that came in the last 5 years since pandemic started. So I've got this down. I've done thousands of investor sales. Now I'm going to teach you guys how to do it. And I'm going to just go through we got SOPs. We've got stuff that you can swipe, everything. All these slides will be on the Investor Savvy website. You can be able to get to it. And I'll also be sending it out. And I'll also be sending my marketing emails that I would send to a client. So I'm a best-selling author, written 6 books, guest expert on HGTV's House Hunters. My YouTube channel is a monster. I have over 11 million views on my YouTube channel. I'm very video forward, and I've closed now it's over 500 homes since 2020. So yeah, that's me. The rest is going to be talking about you and your clients. All right. So this is the point of what I'm trying to do is put it here together, and I'm doing it right now, is to really, my motivation is having fun, making dreams come true through real estate. So, so first, that's actually that's the motto, the byline for our company is having fun, making dreams come true. Because real estate is not an easy business, no matter what anybody says. And so, but the bottom line is that we are having fun, and we're having fun building our own portfolios of properties for ourselves, our clients. And building something that wasn't there before. I barely finished high school, and I didn't go to university, So I just pretty much dove into rolling up my sleeves and learning this business, and actually learning how to really bootstrap the marketing and think outside the box. And so I want to encourage you to also do the same. So I'm looking at networking and collaborating and educating. This is part of the education factor, referring each other and supporting each other, because we don't all have the same gifts, talents, or inventory or products. So I'm cross-pollinating across people across the nation, different realtors in different states. Tom Ferry's organization has been really good to me, be able to let me also participate in their educational series. So we'll also look at helping, this is the real gist of it, is helping you create an alternative source of income. You know, if you've been to the recent presentations with Tom Ferry, I think it was 60%, depending on what statute, 60% of the realtors didn't sell a home last year. And that kind of is it takes me back, that really kind of hurts me, that they're not providing for their family, and they got cars and they got kids in school and they got all this stuff, and it was a tough year. Last couple of years have been tough, So I'm offering an opportunity to have an alternative source of income by connecting other clients and their spheres of influence with other agents, including me across the nation, that are property providers. And then I'm mentoring and doing podcast interviews. So that's my edgy marketing piece of it. Is I get together with you. If you don't know real estate investing or you want to get in front of the clients, we do a agent podcast where I actually interview you about your market, about pros and cons of what's going on in your market, and then I talk about my market, and then see how we can actually help our clients by being able to help them be able to buy properties in my market with 30% referrals. Fees will pay out, and also gives you meaningful conversations you can have with your sphere of influence and your past clients. So just a side note, how I got introduced to Tom Ferry is I sold 7 homes to his mom, Fiona Ferry, back here in San Antonio during the pandemic. So, all right. Some great things about why I love working with investors. First of all, it's 30% of the market is investors. They have high income. They're accredited, which means they have a million dollars net worth or more, not counting their primary residence. Investors are not geo-bound for the most part. You don't have to be, if you live in California or live in New York, you don't have to invest in California or New York. You can, but there are other areas that make more sense for investing, at least from my humble point of view. They're less emotional. They're a little bit more about the numbers. And so we hit them right there, that they basically are looking at the numbers, and it's got to make sense. Investors thrive during downturns. Right now, you got sellers that are maybe starting to feel a bit of the pinch that the buyers aren't buying and they're trying to sell their property. This is time when investors can come in and scoop it. Just think about Blackstone and American Homes for Rent, 15 years ago, when they scooped up thousands of houses across the nation. So they buy often and in multiples. I can tell you most of my clients are new investors that just coming in. I educate them. They buy their first one. If it works out well, they come back and buy another one next quarter or next year. Sometimes they buy multiple properties at once, just depending on their situation. So they buy often and they buy in multiples. And here's a really good one, especially with the well-networked industries like the high tech and the medical industries, is they refer their friends and family. They're very well networked. And if they find a good thing going, they are going to share it with their friends, neighbors, colleagues, and people they hang out with. And so oftentimes I get a call, yes, I was referred by my colleague, or yes, I was referred. And so that's kind of the way the conversation starts. And we're going to go into those conversations here in a little bit. They seek an agent that they can trust, basically, who cares about what they're doing. I don't go out, and I'm not some real estate guru, the guys that go out big stage try to sell some zero down program. No, I'm talking about nuts and bolts, having agents teach them about how to be able to prosper through real estate, and I help guide agents in that area. So, Tom Ferry said, if wish we had, one regret is that I wished I lived more simply and bought more real estate. And he wants to create 10,000 financially free. That's kind of what I'm aligning with his mission. What my purpose is to help also financial freedom for our clients and for ourselves. So everything I'm talking about here about how to help our clients buy investment property, I'm also talking about you. I'm talking about you being able to build a portfolio, because you don't want to work until you die. We have to have a plan, an exit strategy. Real estate is a great way to end up with where you don't have to work anymore if you don't want to. So it really kind of what is your number where you have enough income where work is optional, and you can have that conversation with your clients as well, because your clients they want an exit strategy too. They may be making a lot of money, but they're probably paying a lot in taxes. If they're making a lot of money, I can guarantee you they're paying a lot in taxes, and so they see this money just going out, and and the bottom line is there's ways to protect it, and so we're going to go into that in a little bit. Really kind of go back, and this is something you could take home tonight, sit down, meditate, talk to your spouse, but what's your why? What is the why? What are your clients' whys? They're looking for financial freedom, maybe. Yeah, that would be good. Don't have to work if I don't want to. Legacy. Are we planning for our kids' future? Philanthropy. Maybe it is you want to help charitable organizations or the down and outers that need our help. Or maybe it's just lifestyle. Maybe it's as to build a multi-million-dollar portfolio like I have, just as a lifestyle. I enjoy nice things, and I'm not. It's not my idol, but I definitely love. I'd rather. I've been wealthy and I've been poor, and I tell you that wealthy is better than being poor. So I've helped a lot of people diversify from one property in a high equity area to 10 properties or more here in the lower priced, higher rent price to rent to price ratios here. And this is another way for you to have seller conversations. Why sell or why not? So one of the conversations we have with people oftentimes is, especially in my market where we've had a big shift, is like going, well, I got this 2.75% interest rate on my current residence. I want to buy another one, but I don't want to get, I don't, my payment's going to go a lot higher because I'll be paying somewhere closer to 7%. Well, we've got solutions for that. Why do you want to sell that great property that has that great interest rate on it? That's actually the loan interest rate is an asset to you. So why not rent it out and then buy your next property? And some of our builders out here are offering 4.5, 30-year fix, 4.75, 5.25, 30-year fix right now. So it gives you a conversation to be able to have with them about, well, do you really need to sell it? Maybe you should just keep it. And that way you can rent it out. And there's a whole bunch of good rules about that we'll get into and later on. But you talk about property, become the person that has maybe opening up a different conversation than, oh, hey, Bob, are you thinking about selling your house? Oh, no. Okay, well, hope you have a nice day. Do you know anybody else is thinking about? No, let's talk about, hey, what's your number? Have you thought about this? I'm your property advisor, what's your number, right? So sad truth is most agents don't own investment property, much less specialize in it. Specialists make more money. And that's one of the arrows in my quiver. I do traditional real estate, but a majority of my sales is in helping investors because I've become known for that. I know this is me. I don't invest in the stock market. It's just too volatile for me. I know it's done really well for other people. I'm not bagging on it. It's just not my thing. I invest in cash value life insurance, which is very safe return, and then I invest in real estate. And if I don't take that money and put it somewhere, stash it away, especially in real estate, I'm going to spend it. So get it out of my sight. Otherwise, I'll spend it. And then real estate is a long-term play. And most of my strategies are buy and hold with my clients and myself. Not a fixer flipper and all that kind of stuff. That we do have specialists that do that, but that's not my game. My idea is to buy it, hold it, exchange it, pay it off. It's been a good strategy for many of you. But building a portfolio of financial freedom and leave a legacy for our family. So what is your number again? So since I don't have any test questions or quiz questions in this new teaching that I'm doing, I'm just going to ask you that, is get with you and your spouse or your significant other and say, hey, what is that number? What is it going to take for me to, right now for me, it's 25,000 a month. I have a goal is 20,000 a month passive without having to work. But now I've raised it to 25,000. Why not? It's inflation. So here I was going to put another arrow in your quiver by being the knowledge broker. I'm going to give you some, the thing about people is like, I don't know how to talk to people about investing. Well, this is what this is all about, to be able to give you the questions to ask and then the answers will follow. So, and also I can come alongside you too. If you have clients that are thinking about investing, but you are like, well, I just really don't know what to say. Well, let's get on a Zoom call together with them and have a meeting with them, and then you can hear how I ask questions and how they're answered. You got to start thinking outside the box. The 30% of the investors are 30% of the market are investors, and there's about 2% or 3% of realtors that specialize in it. This is a really open door for you to be able to expand into a new realm, additional to what your normal real estate business is. So we are able to leverage insider knowledge, which is legal in real estate, and relationships. And you can leverage other people's networks, other realtors that do this and across the nation. That's what I'm connecting. Those that are in high equity areas with those that are in areas that are better cash flow. Also that, riches are in the niches. And so that's been my niche. I've always been a fringe person. I've always been also a harbinger, seeing what's coming over the horizon and getting in front of it. And then having those meaningful conversations. So then also you will diversify your potential for marketability for your inventory. So for me, for instance, I have 1,000 homes I can choose from here in San Antonio and Austin that make a lot of sense financially and for rentals, but it doesn't really translate to an area like LA or New York. That market there is not really conducive for investment properties. It's a great place to move your investments from, but not such a great place to invest your money into. We could talk about a whole seminar on those reasons. And then referral fees. So I just had a client that was referred to me from an agent in Scottsdale, sold them a primary residence here at 1.5 million. And right on top of that, then he basically said, well, now as soon as I get my house closed here in Scottsdale, and I know I've already bought the house out in Austin. I'm going to invest more, and that's kind of what I'm looking for is that I paid a referral fee going out, and when he buys property here, I'm going to pay another referral fee to the agent that sent me in Scottsdale, and so we like referral fees going both ways. So who is your client? Who is my investor client? Start thinking about who they're, where are they, where are they, what's their passion, where they live, where they work, where they play. What's their demographic? What's their income demographic, their geographic location? We're trying to create a target for you. What's their psychographic? What's important to them? What are their passions or what are their fears? So what's their needs, what wants, fears? So a lot of my clients are looking for diversification out of the stock market, looking at the Tesla stock that dropped 40% in, a couple of months. It's like, holy moly, real estate doesn't do that. It does go up and down, but it doesn't go like that and like that. So that's just too much of a heart monitor for me to watch it go up and down, up and down, up and down. So I like just I know there's a lot of clients that are diversifying in hard assets, looking for tax shelter. We can do a whole presentation on tax shelter and finance and all that, how to finance these deals and how to talk about tax. One of the last slides in this presentation is the details on tax shelter. Wealth building, financial freedom, lifestyle, legacy, philanthropy. Are they open to out of the box thinking, out of the box opportunities? So back in the days when I was first coming out here, not many people were thinking, why would you want to invest in Texas? I said, because I could buy 3 houses for $75,000 a piece. That was back when I first started investing here in 1989. And it was like, oh, I guess that does make sense. All right. So this Bill, Mr. Bill, he's in every one of my presentations. He's a great poster child. This is my avatar. He owns a house this was his investment property he had in San Mateo. And then he also had another primary residence. So that's the kind of guy that I'm looking for. I'm looking at a guy who's a primary residence, wants to sell his $3 million Saratoga home and relocate to Austin. I pay the realtor his referral fee of 30%, and then I get the client. And then I sell them, he may have a rental property that he also wants to sell. So I had him sell that one house for 1.7 million, and he's able to buy these 9 houses. Tax deferred. It was not a taxable event. It's been deferred into the to the basis of the next property. So he's financially free. And just there's, like I said, the difference between what you get in San Antonio or Austin as opposed to what you get for a primary residence in San Mateo. All right. Conversations that you may want to know about, and we're going to, this is kind of this is the basic foundation of why do I want to invest in real estate? It's a hassle. I don't want to deal with termites, the T's, the termites, tenants, and toilets. No, we don't. It offers real estate is a hands-on. We do turnkey hands-off, and I'm going to show you how we do that. A bundle of benefits is income. It provides income and depreciation, tax benefits. So income, just the rents come in. Also can potentially have positive cash flow. So if the income exceeds the expenses, and oftentimes they do, that's your positive cash flow. Most of our clients are looking at least they want to break even, but they also would love to have some positive cash flow, to have a little bit of buffer. You're not going to get rich on $200 or $300 positive every month, but you start looking at that. You own 10 properties and they're free and clear. That starts to be more like $15,000 a month free and clear. That's the way to do it. I teach clients buy 10 properties in 10 years and pay them off in 20. Very simple. Depreciation, tax benefits, and that's a whole nother conversation, but that is a big, people miss that whole side of things, is that real estate is depreciable. The buildings are depreciable. And we'll go into a couple of details towards the end of the presentation. All right. Equity, obviously, appreciation. Those are the benefits over a long time. It's an inflation hedge. If you think about a house, it is a collection of commodities, from the wood, the lumber, the everything is built in the house is a collection of commodities. It is a hard asset. And American real estate is the envy of the world. It's actually probably one of the biggest from people from out of the country. They for good reason think that American real estate is one of the best investments in the world. So equity appreciation, inflation hedge. Oh yeah, but also somebody else pays off the mortgage. That's what's amazing. So it's like having a car and somebody else makes the car payments for you. So basically the tenants pay off the mortgage. So you're not paying the mortgage off. You're getting your break even or positive cash flow. The mortgage is paying off itself. You can take that positive cash flow and throw it towards the mortgage, pay it off, get it done, paid off in 20 years instead of 30. So love the fact that somebody else pays off the property. So we're looking for leverage. You can put as little as, 15, 20% down. 25% is usually what I put down, but there's even more minimum downs that we've seen. Fannie Mae, Freddie Mac just came out with a 5% down for multifamily. So interesting stuff that's coming out. Predictable, relatively predictable. The values go up and up over time. And it's got some really great estate disposition advantages. And so the death and taxes are inevitable, but you can actually literally avoid taxes completely, or at least for your heirs could avoid it completely through what's called a stepped up basis. All right. So how do I find my investor clients? Okay, where do I start? Well, obviously your sphere and your database, and I do most of my marketing through email, calls, text, you know how it is, but basically my sphere, my database, that's my number one. I also built that database through presentations similar to this, forward-facing B2C type of presentations, also webinars, podcasts, my YouTube channel is brought in. But once again, I do edu marketing for my consumer crowd, so they can understand basically what it is and why they should invest in real estate and why they should invest with me. You can do the same. So I've done a lot of presentations at meetups or just been involved in networking groups, both here and in other states. I get invited to talk to investor clubs and investor groups, and that's a great place if you can get a way that you can present to their group about what the opportunities are around the nation. Investor forums, Bigger Pockets is probably one of the biggest investment forums. You can find a lot of information there. Face group ads, YouTube. I had some guys who were now posting Facebook ads around the Bay Area to get them into a little quick presentation and then upsell them to the properties that make sense around the nation. Other agents are also a great source, and that's one of the reasons why I'm doing this. I want to connect with other agents and have a sphere that would need a place to help their clients park their money. Networking events, real estate conferences, always great. Great with networking other realtors and conventions. Facebook, Instagram, YouTube. Financial advisors, great place to find another. What are your financial advisors' clients? Are they looking for real estate? I know one of my investor brokers, that's pretty much all he focuses on is financial advisors. State attorneys and self-directed IRAs, companies, and that angle, be able to invest with an IRA. Direct mail to high probability sellers. So this is a little bit more, more of the farming area is that you can get a list from the title company and mailing addresses of high equity, non-owner occupied properties and basically, especially even if they're in a vacant, those are even better. Those are people that are don't wanters. They want to do something with it, but they don't know what to do with this $2 million property they inherited. And here you are, where you can go ahead and think outside the box, help them think outside the box. So definitely a good marketing campaign. I'm going to be doing that this year is direct mail to high probability sellers. Just quick, when I started my presentations, all about facts, 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 and I realized that through some of my teaching, learning from a lot of the gurus out there on internet marketing, said people like stories. What's the emotion behind it? So I'm going to just quickly tell you about my rich dad, poor dad story. Just a quick 2 minutes. So please let me entertain you. But you'll get the point of it is that that people will connect through the heart through their own dad. They're like, I always ask my in-laws, and my father was like, oh, would you wish you kept your first house? So ask anybody that's up in age that's got gray hair, do you wish you kept your first house? So it's like, wow, yeah, I wish I kept my first. I paid $17,000 for it back in 1963, and so that house is worth 1.9 million now. So you have those conversations. My real dad is a real estate attorney. My father-in-law is currently a realtor investor. He's still with us. 85 years old, doesn't have to work. My dad's first purchase was $17,000 in 1963 in San Mateo, and he bought and sold over the time that I was growing up. 12 houses. And if he kept those houses rather than selling the houses to buy the next one, his net worth at his passing would have been $20 million, plus minus. This is the first house I lived in 1963, bought that for 17K. The buy and hold strategies, my father-in-law, he never sold his properties, always did the exchange, held exchange. He lives comfortably off the income. He's financially free. His estate grows exponentially. And he's enjoying, us, the kids and the grandkids and the granddogs. He will leave a substantial legacy over a 10-figure inheritance for the heirs here. And so thank you, Rich Dad. And we won't have to pay taxes on it due to the current stepped-up basis laws. And so that's basically, I'm not giving tax advice or legal advice, but no tax advice here, but check with your CPA. It's a pretty cool thing. Just one quick thing before we get into the Andrea Sullivan. She was my poster child. She did pretty much what Mr. Bill did. Took a property at Huntington Beach, turned it into 10 properties plus a single family residence. And she wrote this amazing testimony on my Google page. And I'm not going to sit here and read it all, but it says, I can't believe approaching 25 years since you helped me find my beautiful home I'm still living in. On top of that, you helped me find 10 rental homes, which are the absolute best gifts of my entire life. Recently divorced without a job. Somehow you made it possible for me to qualify for 10 homes. So that's my why. Why do I do what I do? That's to be able to see that now. She retired, I think, 2006. She didn't have to work anymore. So anyways, research, acquisition, management, disposition. That's basically the whole life cycle. We've got to research, be able to make sure we're investing in the right properties in the right areas, the right price, and everything. The properties are also avatars. We have a particular where we stay a niche. Acquisition, we help them find the property, finance the property, and close on the property. Get it if it's a fixer-upper, get it fixed up, help them get the cosmetics done. And then we jump right into leasing and management after that. So that's the transition from buying the property to management. And actually, we work with, in my area, we work with 3 different property management companies. I have one, and I have one that works north and one that works south because I cover about 150-mile radius. And I get referral fees. Here's another sidebar that you may have not thought of. I get referral fees every month from every property that they manage. As just a percentage. So I get a percentage of their management fee, and it's actually part of my my retirement, if you want to call it, my financial freedom. My number is I'm getting about almost $4,000 a month in monthly recurring referral fees based on the properties that I've given to my property manager. So the management and leasing is the key to the whole situation here, and that's crucial, and it's tough. and it's necessary. And we when you get a really good manager, they're gold. They're worth their weight in gold. And then disposition, of course, so it's a life cycle. Eventually, got clients right now. She's now 75. She bought 4 properties from me about 15, 20 years ago. She's okay. Now she wants to live, to be a little more liquid and all this kind of. So now she's selling her properties and asking about what kind of gain that she had, and she has a substantial amount of gain, and that's always a good conversation to have. So yeah, helping them dispose basically to move on to their next property, and then also avoid taxes, hopefully, in being able to do that, and we or defer them, and that's basically what we're looking at. So you got to ask, what kind of properties are you or your clients interested in? And there's lots of different choices, and I specialize in a few areas. I don't try to do it all. There's other agents that specialize in these other areas, and that's kind of my point is building this network of other agents around the country that have fix and flips, because I don't do that. My specialty is new and resale 1 to 4 family, and I also do some commercial, but mostly new and resale 1 to 4 family. Fix and flips, don't really get involved in that. It's a great way to do it, but it's more of a job than it is an investment, unless it's a fix and hold, which is really another great way. So you get a great deal on a property, and you as a real estate agent, come on, you guys, you know when the good deals come, when the distraught sellers and distressed sellers come in through the door or through your office, and they don't have the money to fix it up, but it's a great opportunity, and also, so you buy it, you get paid a commission on it, so 3% of your you got a percentage of your down payment already done. Oftentimes I'll negotiate a higher commission, and what I do is I take that commission and just roll it over into my what I have to put on the down payment of the property. So you can fix and flip. That's a business. Fix and hold is more of an investment. And then we got commercial. Now I've got connected with an NAS, which is one of the largest commercial brokerages, and I'm like this with the commercial broker, and they have a network of commercial properties all across and other brokers all across the world, and one of the top 10 in the United States. So that's my commercial connection. If you're looking to buy land and ranch, I've got the guy. So once again, I don't do those, but I know who, and that's what they're looking for, because I already know. I'm a good old boy. I've been here for 30 years, so I know I'm very well connected. So real estate investment trust, it's investing in real estate, but it's more like a stock. Same with the other ways to look at it is limited partnerships and investment funds. Those are usually done for like syndications for buying apartment buildings. And that's a little bit different. We'll be talking about in later teachings about syndications and funds, about how to do value add properties. And then private money, and that's not really investing in real estate directly. It is investing as a lender and receiving rather good, healthy returns. My brother-in-law owns a private money fund and private money company, and so there you go. I've got a connection with, if anybody's looking for more of a passive type of income. You got to know your cycles of the market, and every area has a different cycle. And that's the whole thing, is that the real estate values are not static, and you have to educate your clients that it's not static. So let's talk about, we can go back 40 years. I spent a lot of time on this in my live presentations. This chart has made me a lot of money. But I won't go into too much detail because we only have a limited amount of time. But you got to know that like when in this almost 40 years, historically, when the California is doing well, Texas is not doing so well. So right now is exactly what we're talking about. The prices in California are, because of the pent up, there's no buyers out, or the pent up demand. They're continuing to increase. Right now we're flat, and then so now. 3 yeyears ago, we were like this, and the Bay Area was like this. So just if you go back, and like I said, I spent a lot of time on this chart in my presentations, and this chart goes all the way back when I started doing presentations in the 90s, and I used to do it with what we call a overhead projector, with the cellophane things that you had the markers on. Pretty fun. Been doing this a long time. Okay, so this is from Gary Keller's Millionaire Real Estate book and investor book, and this is kind of where we hang in, and it makes a lot of sense. We spend a lot of time on this screen for our clients as well, as to where are the great deals, and it's usually below the median price, but not down to the the really low end properties, the C's, B minus C properties. So I pretty much stay in the A minus, B plus category. Find that as my sweet spot, and I think my clients appreciate that. So we kind of we're at the center of this, or we have our clients at the center of this. It's also from Gary Keller's book. And this is a great, graphic of what we do as we pull this all together. As their consultant, we pull the other people involved, the other real estate agents, the attorneys, property managers, contractors, accountants, investors, and property managers pretty much handle all this outer service circle because you don't. We do turnkey. We don't. Our investors don't have to do anything but get the loan, get the house, and then turn it over to management. It gets leased, and they really are hands off from them. They'll never talk to a tenant. So these are kind of the highlights of what you should be, what I have as a network, and I built this up over many, many years, but you can too, or you can plug into my network. And so you are the investor savvy agent, and then CPAs are super important that they have tax advisor. I would say one that a real estate CPA that specializes in real estate. All these people should be very familiar with real estate investing. If they're not, then find somebody else, because not every CPA specializes or even knows all the rules in real estate. Same thing with your insurance. Insurance is a real challenge right now, and you've got to have an insurance agent that knows real estate, knows dealing with LLCs and all this other stuff that we have to. Lenders, same thing. A lot of mortgage brokers, bankers don't specialize in investment property. I used to be a mortgage broker, mortgage company owner. And so I know the financing side of things, and I can talk it, speak it, do it in my sleep. And I'm glad I'm not in it anymore because it's a really testy business. It's hard. Property management and leasing, you've got to have good ones, and we are constantly looking for the good ones. I would say I've found very few great property managers, but I found some really good ones. And that's the important thing, is you want to find really well plugged in property management, local boots on the ground. They're trying to do this internet property management stuff, and it doesn't work. It's a very belly to belly business, and we spend a lot of resources on making sure that these properties get leased. Connections with builders and other investor savvy agents, and then with the trades, which you most likely would not be involved with. But if you're doing a fix and hold or a fix and flipper, you're going to have to get involved with the trades, or have your agent will have to do that. All right, we're going to SOP here. And so we're getting nuts and bolts. A lot of great reasons why, good philosophy. But let's say now, what are we going to do? What conversation are we going to have? So this is how my SOP works. I get an initial call. And this is particularly how it goes. Hi, my name's Hakeem. I was introduced by my colleague at Apple. He's bought a couple investment properties from you, and he's looking at. He wanted me to connect with you. I'm interested in doing what he's doing, right? Something like that. So I have a discovery call, and I'm going to show you the questionnaire that I use both on my website, and a pretty good guide of what those questions that I would ask first initial call. Then after I have an initial call with them, I send them an onboarding email, and it depends on whether they're experienced or whether they're not. If they're not experienced, I love this onboarding, simple 3-point onboarding email with a nice 40-minute why you should be investing in real estate and why you should be using our group or whatever it is. But it's a very educated. It's based on my live presentations before pandemic shut everything down. So I went live with the presentation, and then I recorded it, and then I went ahead, and that's what I use in my first initial email, so they can kind of get the gist of it. If they're experienced, and then I look to have a second call, and I go into the deep dive. So the deep dive is more detailed of really what is the opportunity. And we're going to go into that in a second of all what there are. So here's the questionnaire. So I usually, when somebody calls me, just like that Apple guy I was just talking about, it says, I go, okay, so after the niceties and everything, the weather and all that, I say, okay, so tell me, what are your thoughts? What are you thinking? And that's a great question, because I don't know what they're thinking. And they'll tell you what's on their mind and what's top of mind. And that's a great discovery question. And then I ask, are you currently a real estate investor? I want to see their level of experience. And if yes, then where are they currently investing? And oftentimes they have properties in a very high equity areas that aren't performing very well as a rental, but have a lot of opportunity for exchanging and for being able to leverage that like Mr. Bill did. And then this is a great question too, because I want to find out where they're at. Are they deep? Are they big fish, deep pocket, or are they, just getting started? How much capital are you going to make available for your next investment? And here you could buy a single family home with 25% down with all in for 50, 60,000. I've got some clients that go, little single family home is not big enough deal for me. I need something more, what else you got? Like, well, about fourplexes. What about multifamily? What about 12 units? Okay, well, then that goes into a whole nother conversation. But my typical one is, yeah, I'm just getting started. I've got a couple 100,000. I'd like to buy my first one. If it goes well, I'll come back and buy another one. Yeah, so whatever it is, how much capital? And will you be paying cash? Believe it or not, 32% of the transactions in the United States last year were cash buyers. I get agents that are going like, the sky's falling, the interest rates are so high. I said, look, what about the 32% that paid cash? They don't care about the interest rates. Oh yeah, I didn't think about that. Are they going to be financing it or going through a 1031 tax deferred exchange? I would do a whole presentation on tax deferred exchanges. Who else will be involved in the investment? It's a great question. Can't tell you how many times I had not asked that question. I ended up finding I'm also all of a sudden 5 conversations into it. Now I'm bringing in Uncle Bob, who needs to know all about it and is skeptical, where the other person that was getting involved was, you know what I'm talking about. And then, so what's your time frame? Always good. I'm not. Oh, well, I'm ready to go now. What is it? That changes the conversation too. When would you like to close on your next? See, I'm already closing them. When would you like to close? Open-ended question. If you were to invest out of state, what are your top 3 concerns? And I actually have a box in the online form that says 1, 2, 3. And I can tell you, and you also put that questionnaire, the same questionnaire I use for my live presentations. I can tell you that inevitably there's 3 top concerns and the number one is I don't want an empty property. I don't like vacancy. I don't like vacancy either. And the bottom line, that was one of my number one focuses is get a tenant in that property, get a good tenant in that property as soon as possible. And we'll talk about that a little bit, how we do that. But so the number one is I don't want to have a vacancy. Number 2 is I don't want to invest in an area that I regret, a bad area, quote, an area that is going to not perform. Or an area that I'll never be able to sell a property because it's out in the middle of nowhere, or it's in an area that nobody wants to go to at night. What is it? So, they don't want to buy a property that they want to know that they're buying a good property. So number 1, I don't want a vacancy. Number 2, I don't want to buy a property in a bad area or a bad property in a bad area. Number 3 is they want to know who to trust. They don't want to get taken advantage of. And there's plenty of real estate gurus out there. And that's why you're the knowledge broker to say, forget the real estate gurus that are trying to do zero down, use other people's money. We're talking about people that already have money that need a place to invest it. And what's your big why? This is really good for a lot of times. I really ask it because I really want to find out if they have a passion for real estate. And they oftentimes they'll give me glowing things. Well, my dad did this, and I started working with him on buying properties back in the 90s or 2000s, and whatever it is. Like Mr. Bill, he was a printer. He owned a printing company. He was not an investor, but he loved real estate. So and he just had passion for it. He did well. And go back to who can I thank for referring you to me? And that's actually one of the questions I say regarding after what are you thinking? Like what are your thoughts? So I always like to say, who I thank for referring. Oftentimes they'll tell me, but if they didn't, I want to find out how they found out. Did they find us on the internet? Did they find us through one of these meetings, or did they get referred? Because I want to thank the referee for sure, but also it reminds them that they've been referred by a friend. And so they're putting their trust is transferring to me. So it's definitely something that's, helps in the barrier to getting the sale done. When would be the best time to contact you? Obviously, and how do you prefer to communicate? Usually it's email, text, or phone. So those are usually my questionnaires. Okay. Then we're going back into after I have the initial conversation and send them the onboarding email. The first one, the intro email. If they're already a seasoned investor, then I don't need to send the intro because they already know the game. And we're going to go right into this deep dive email. This is what it is. It has an intriguing description of the opportunity, backing media, docs, newscasts, podcast, other podcast videos, virtual bus tour, area and property virtual tours, rental market analysis, performa, inventory list, invitation to do another Zoom call. So then we get on another phone call or a Zoom call after that and get down specifics. I'll take them in with Google Earth and we'll go down into the neighborhoods and we'll go to particular properties and all that. And so what I'm going to do, if you're on this presentation, if you've signed up, then I'm going to send you, as if you were a client thinking about purchasing a property, I'm going to, or thinking about getting involved, I'm going to send you these initial onboarding email and then the follow-up email, which is the deep dive. Lots of information. A lot of our clients, especially our engineer types, love a lot of information, charts and graphs and all that. So just kind of looking down, this is an inventory sheet. This is one of 3 pages of inventory. You can see some of these houses, $207,000 for a 1,627 square foot house. Ooh, that's a good deal. Then I do a market analysis done by my leasing agent property managers. I have a pro forma, and this is another for another teaching. We're going to go into all this, the pro forma and what the numbers are. How do we make the numbers work? What do the numbers mean for you and for your client? Not that difficult. I give my clients this spreadsheet. A lot of them are very good at spreadsheets, better than me. So they can play around with them, plug their own numbers in to be more conservative or more aggressive. Then after we're good to go, okay, let's go start. First of all, we're going to look at properties, but we need to get you pre-qualified, pre-approved first, because they, just like anybody else, whether first-time home buyers or $1 million investors, we need to find out if they're qualified. And depending on what kind of property they're looking at, if they're looking for new, they'll go through the builder's lender because they offer the incentives. If they're looking for resale, then we just use one of our preferred real estate mortgage companies that know investing. Find the property, about that, and then we do, if they're not coming to the area, then we do in-person or virtual video, photographs, plats, FaceTime. And then I sold, 500 properties during the pandemic. We had to do it all with these things: virtual, video, photo, plat, FaceTime. Then execute the contract. And depending on if it's a new construction or not, then you're pretty much done. If you're in town, you can do your own walkthroughs and get to know your property. If you're not, we have a full-time walkthrough manager. That's what she does, because there's 2 walks. With a builder, there's 2 walks: the initial walk and then the punch list, and then coming back to make sure they did the punch list. So 2 walks per property. And so if it's a resale, a little bit different process. Then closing, do it remote or in person, and now they're even doing Zoom closings. If you didn't know, it's pretty cool. And then, of course, turning the keys, utilities, you get the warranties, all that turned over. And then as soon as it closes, we turn it over to leasing and property management, and we pay out 30% referral fees. And we've been getting 3 to 6% referral fees on these. And I guess we're not supposed to talk about percentages, but that's the bottom line, is we do with these builders oftentimes, and they get up to 6%. So that's always a nice refreshing. And then you start looking at the referral fees, they do add up. I've been sending thousands of dollars in referral fees this month for people that referred their clients, and they keep coming back. Then, of course, you ask for a review on your Google business page, and of course the referrals. Who else might would like to get involved in real estate investing? That's it, guys. That's the 12 steps there for the SOP. Here's a testimony, Lana Kalinowski from Minneapolis. If you're looking for property, anybody in Minneapolis, St. Paul area, she met to my Tom Ferry summit, met her at a meetup that I put on in the summit back in August, and she ended up going that, and she really was looking for the tax benefits. She wanted an investment property. She wanted to build a portfolio, but right now her husband and herself had a really good year. And so being a real estate professional with some really great tax advantages that not many agents and not even CPAs sometimes know. Some of these things that are right out of the IRS, but no, there are loopholes that people don't pay attention to. And this is getting towards the last slide, is back to motivations. I don't want to pay as much money to the government. All right, so tax advantages, and won't spend a lot of time. We're going to do a whole presentation on this, because this is where the rubber meets the road, especially for me. Tax savings, the building is depreciated over 27 and a half years. It's a paper write-off. So if you take a $200,000 building and divided by 27 and a half years, it works out to be just around $10,000 paper write-off every year on top of your normal write-offs. So say it's $10,000 write-off, you can write that off of your ordinary income if you're a real estate professional. There's other rules if you're not, but for us as real estate professionals, absolutely a game changer. And then we can also do a cost segregation, do accelerated bonus depreciation. That's a whole nother presentation too. And so that is amazing. So during pandemic, I had a couple of $1 million plus GCI years, and my CPA told me I'd have to owe $155,000 in taxes on 1 year. I said, I don't want to pay that much, but I'd learned through my own presentations and some tax advisors who came to them and presented at my presentation was cost segregation for single family homes. Basically what it did is accelerated the building to, I got about $60,000 to $80,000 worth of a bonus depreciation, and then I front loaded, and so my tax bill went from 155,000 to 30,000. Stated advantages a lot for those that have got good net worths and they're looking to be able to pass their properties on or pass their net worth onto their kids. All these appreciated properties, when the kids inherit it, depending on where they're at on their total estate, but is they won't pay taxes on the appreciated value. And really cool thing, so when we get a property from my father-in-law and we inherit it, the 27 and a half year depreciation schedule starts all over again. Or you can sell it and not pay any capital gain because that's all wiped out the day that they go to the pearly gates. So thank you, Rich Dad. Augusta rule. This is when the last couple of years, I didn't know this one. You can rent your primary residence out to your S Corp or your business. If you have a doctor or consultants that, they rent their own house out to their company, they have office meetings and they have, training and bonus sessions and, workshops and all that at the house. I could not write off I wrote off $20,000 in renting the house to myself. Another rule. Now, I'm not giving tax advice and I'm not giving legal advice. So just check with your CPA. So I just want to give my caveat there. All right, so this is kind of us. I don't know all about the land and commercial, but I know the people that do. I don't know about fixers all that much, and I can connect you with people that do. Residential 1 to 4 families all day long, and also be delving into commercial as well. Then also connecting with other people with their spheres. That's the whole point of building this up, is creating a network. Their sphere of influence. Maybe they want to invest in Oklahoma. I got that guy. Maybe Jim in Florida. I can connect you with him. David out in Nevada. So that's basically the whole purpose of my building in the Investor Savvy Network is not only for collaboration, but it's also for education, edu-marketing, also for being able to connect with other agents in different markets that have different opportunities. All right, so back to the where we started was I love having fun making dreams come true through real estate. I'd like to teach you how to have fun doing this. It's a blast. And then we're going to collaborate. I'm going to help educate my clients. My investor agents have been educating me about best practices. There's all kinds of cool things that they're telling me how they do their farming and things like that for investors. Then refer each other and support each other. Helping agents create alternative sources of income. I'm really big on making sure that, for instance, I have a roofer. We had a tornado, believe it or not, come through one of our towns where I sold over 200 properties, and it didn't kill anybody or anything, thank God, but it did rip off a bunch of roofs or damaged a bunch of roofs. And I gave 60 roofs to one building, one roofer that I trusted that did my work. He paid me $500 per house. I ended up earning about $30,000 of mailbox money on that, basically just referral fees. So I get referral fees from my management company. I'm looking to receive referral fees as an extra source of income. And of course, there's always the commissions and the referral fees on the sale. That's big. Love to mentor some hand-picked agents. And then anybody, if who wants to be involved in an agent podcast, are welcome to do that. Just connect with me. Here's my contact information. I'm going to go into the chat. We're at 12:54 my time. Thank you guys for spending the time with me. Let's answer some questions. If you have any questions, go ahead and throw it in the chat box. Okay, let's see. Good luck. Thank you. I'm sorry, what do you mean by your number? Number to retire, number for passive income. Yeah, number that you would have to have coming in passive income where you don't have to work. Well, work is optional because I don't think I'll ever stop working, but I don't want to have to work. Then also ND said, what does turnkey mean? Turnkey property means it is, or it's up and running, it's leased. It means that you don't have to touch it. It's an investment that you don't have to it's turnkey. So in other words, it's managed, it's leased. Um, you get your check after everything else is said and done at the end of the day. Would you mind sharing? Okay, let's see, turnkey. Would you mind sharing the slides of video replay by email? I'm also Tom Ferry Elite. Yes, but Monique, I will be glad to do that. Thank you so much. The website link, it's been on every slide almost. It's called theinvestorsavvyagent.com. The Investor Savvy Agent. Oh, here, I'll come back here. You're right. I should have put that on the last page. How do you build relationships with other vendors who can help with investors? Well, I get calls from oftentimes from a vendor who knows what I do. A roofer actually just they referred me a sale because they knew they wanted to sell the property. They did the roof on it, and they said, "Who do you know?" So I got a referral from my vendor. I also get referrals from referrals from my tenants. So the thing about it is that you just have to make sure that you let your um, your referral partners know that you're looking for more clients. So I can't tell you how many insurance policies I've given out. I'm like, hey, you guys, do you have paid count or just participate for free in bigger pockets? So no, there's a free version. I think I've got the lowest tier on it. I don't spend a lot of time on bigger pockets. It's a great place to be. There's a lot of good stuff and there's a lot of noise. Okay, ND, you're welcome. Ted Mosley, hey, thanks for is there a benefit to a paid account with I haven't. They've actually got an account where they will allow you to be a representative of in bigger pockets for a particular area. You can pay for leads. It's kind of like the Zillow thing, but I haven't gotten that far with them. But there is more. You can get more access with the paid account with bigger pockets. Do you have suggestions on how to approach an established real estate agent or agencies to shadow them and learn from them? That's people like me at my point. I'm actually in my career. I've done it. I've done well. I'm continuing to do well. I'm continuing to help. And right now, I've got a new agent out of Killeen. He's a new agent working with Tom Ferry, and he's shadowing me. He's seeing what I'm doing, and I'm mentoring him because I don't want to keep all this bottled up and all this knowledge and experience and wisdom that I have that I can that I've been helping my clients. I want to pass this legacy on to the next generation. So Emily, thank you for the high five. Appreciate you. Would love to connect with you as I'm starting out in the greater Seattle area. Okay, awesome. You once again, let me see. I don't even know how to get out of the chat here. So let me see if how do we get out here? Go down. Okay, there we go. Yeah, so there, once again, at the top of the website, hope you can see it, theinvestorsavvyagent.com. It's right there. Here's my email address and phone number. You can also schedule a call. Just put your name on my calendar. Your time, and I'll connect up with you and love to find out how I can help you and your clients. I've also been known to fly out to areas where people have maybe 5, 10 very interested clients that want to learn more about it. I can do a Zoom like this in a conference room, or I'll even just go in there and cost me $300 to fly to the Southern California or the East Coast. So I'd be more than happy to if you need some face-to-face, belly-to-belly time with some of your clients, I'm more than happy to do that. Really, the technology really helps out being able to do Zoom and being able to answer questions and face-to-face is better. So anybody else have any questions? We're here coming up at the top of the hour. We did it. And I appreciate everybody who got involved in this. And appreciate the Tom Ferry organization. And it's not just for Tom Ferry folks. Obviously, I'm been connecting with other companies, but Tom Ferry's got such a great foundation. And I sold his mom 7 houses, so that says something. And so But yeah, looking forward to working with you, connecting with you. Hope this has been a great opportunity for you. Let's get on a call. Let's keep the momentum going. Of course, you can, if you go to Investor Savvy Agent, there's a Facebook group. There's just getting started, but get in there. Let's get the start building community. There'll be more education coming, more specific, like I said, for tax advantages, financing. That's a whole nother topic. How to have your clients and yourself finance deals, subject twos, wholesaling. There's so much in real estate, and I want you to take this one thing though, is what one area do you want to focus on? Because that's the problem a lot of times. You offer too many opportunities and not enough focus on, and I'm the same way. I see, all these different opportunities. And I especially like when I go to a conference or things, and I just tell my, because I have a tendency to do way too many things, is I tell my coaches, I'm saying, look, I have a deck of 52 cards. Um, I have a deck of 52 cards, but I just really want the four aces. So give me those four things I should be able to focus on. All right. So anyways, I appreciate you getting involved in it. Thank you for the questions. And do you have any other questions for me? You're welcome to shoot me an email and we will connect then. All right. Hey, you guys have a great week. Be productive. Hope you had some inspiration and maybe some challenge you a little bit to get you up and running out again, and to be able to think about a little bit different ways to make some money and help your clients make money. All right. Talk to you soon. Appreciate you.